Well, I think the signals, as you say, are somewhat better coming from Argentina than coming from Turkey. I think the problem that is specific and shared to both countries is that in different ways, the market is still very long Argentina and Turkey, right? The investor community had bought something like, I guess, about $80 billion of hard currency, dollar-linked or dollar-denominated debt of various kinds from Argentina. And although I would suggest that the investor community is probably underweight Turkey, the financial sector as a whole, including the banking sector in Europe, has a good deal of exposure to Turkey as well. So I think mobilizing more resources to fill the funding gaps of both countries is going to be very difficult in this overall, sort of top-down macro environment where the dollar is strong, the Fed is tightening and maybe diverging a bit from what we and others had expected compared to the ECB and other major central banks. So I think we have a top-down element there, and you have some country-specific funding needs that are pretty extreme, as well as the domestic political and policy debate in the two countries, right? So quite a complex situation. I would also draw a distinction. Yes, sorry, go ahead.
I was just going to say, I mean, you talk about this issue with Fed divergence, and I have to wonder if that really is the big issue out there, because we talk about the idiosyncratic factors with Argentina, with Turkey, but take a look at what's going on with the Indonesia rupiah, for instance. And Indonesia doesn't have the similar problems that either of those economies face. So really, are we talking about a case where investors are saying, why should I get invested in these countries with current account deficits until this Fed normalization period is over?
I think there's definitely an element of that. There is a tightening in global financial conditions that is affecting EM currencies across the board. So as you say, it's not just Argentina and Turkey. It is a bunch of other countries that are running large current account deficits as well. But I would be careful of sort of tarring everybody with the same brush, whether it's Argentina with Turkey or whether it's the rest of EM with those two countries, right? I think what is a little bit different about the other countries is that they're going to experience an adjustment which is going to be led by their currencies already taking place, where their currencies are depreciating. I think it's a bit superficial to characterize that as contagion. It's not the same situation as in the past when EM countries had dollar fixed exchange rates of various kinds, right? So in some countries, the currency depreciation that we're seeing is a natural part of the adjustment process to a tighter U.S. policy stance and tighter global financial conditions. The appropriate response from the country that's hit by that tightening in financial conditions is to tighten monetary policy, slow down the economy, adjust, and keep inflation under control. And that's what you're seeing from Indonesia and some other countries, India and various others. What you're seeing from Turkey is resistance to that idea. Right, denunciation of the dollar is one thing, but there's also an undermining of the central bank's independence and credibility that's taken place over a long period of time by the Erdogan government. And so that puts Turkey in a very difficult place. Argentina has had some elements of that story of undermining the authority and independence of the central bank, and has also tried to stabilize from a very high inflation rate and reform a very distorted economy without a fixed exchange rate, right? It's quite difficult to do that kind of stabilization without a fixed exchange rate. So there are very different things going on. There's some elements of similarity because of the Fed, but I would say some countries, like Argentina and Turkey, are going to face a severe slowdown and a crisis-type adjustment. And most others are going to face an adjustment that is more normal, let's say, where the currency leads the way.
Arnab, bottom line here, I know you're underweight Argentina and Turkey, but in the EM space, I mean, where would you be invested?
I think what I would take the cue from the current account question, right, and the exposure of the market overall to the indebtedness of the country. And so I think, regionally, we would be more inclined to be long Asia, long surplus countries, and long countries that, like I say, are taking the right kind of currency response to the currency pressure, which is to tighten up, slow the economy, and bring the overall external and fiscal financing needs under control. So, as this process plays out, we'll have to keep, as the Fed continues to tighten and as the rest of the world economy adjusts to that, We'll have to see which countries continue with the right kind of adjustment process, but that's where we'd look to be, quote unquote, buying on the dip because the valuations are becoming attractive.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.